So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions, instead of choosing ETFs. In today's episode, we're going to take a look at the recent developments surrounding a clinical stage biotechnology company called RECURSION Pharmaceuticals, trading under the ticker symbol RXRX. The company stock saw a significant surge, which doubled in value, followed by a $50 million investment from the AI leader Nvidia. Let's explore the impact of this investment further, as well as the potential opportunities for this company. Before I do so, if you like what I do, please check out the affiliate links down in the descriptions. If you make a purchase while still in the same session, it doesn't have to be anything that I've recommended or anything that I've linked, but as long as you made a purchase on Amazon during the same browsing session, I may earn a small commission. That's going to go a long way helping this channel to grow. Thank you in advance for your support. And without further ado, let's go back to RXRX, Recursion Pharmaceuticals. So the news of Nvidia's investment in Recursion generated a substantial market interest, bringing the spotlight onto Recursion's AI-powered medicine discovery platform. The company's AI platform, known as Recursion Data Universe, boasts a massive proprietary biological and chemical dataset spanning over around 20 petabytes. Additionally, the Recursion Map, a collection of billions of searchable biological and chemistry inferences, enables millions of weekly wet lab experiments. Recursion Pharmaceuticals competes with Schrödinger Inc., SDGR, on a NASDAQ, which is another leader in AI-powered medicine discovery. Recursion currently has 4 clinical trials and multiple preclinical projects targeting various cancers and diseases. The company has strategically acquired 2 leading AI medicine discovery companies as well: Cyclica, known for its digital chemistry software suite, and Valence, which provides AI or ML-powered chemical property predictions, for a sum of $87 million. Now, Recursion has also established partnerships with pharmaceutical companies like Roche Holding AG. Through these collaborations, Recursion has up to 40 programs that could potentially generate over $300 million in royalties from Roche. So the medicine discovery process is known to be lengthy and resource intensive. Of course it does. It can take up to 15 years and something like $3 billion to bring in new medicine to the market. But AI and machine learning have the potential to shorten this process by leveraging large data set of biological data in order to identify new medicine targets and design molecules that can engage in specific targets. AI can also help in predicting how efficient and safe those new products are going to be, reducing both time and costs. Also, the personalized medicine therapy, utilizing patients' medical data and genetic makeup, is also an area where AI could make a significant role. So, Recursion's advantage lies in its extensive dataset, boasting a massive 23 petabytes of biological and chemical data, including pathways, genes, proteins associated with diseases, and so on. This wealth of datasets sets them apart from the earlier attempts by other companies, such as IBM and its AI platform, Watson, facing challenges due to limited or insufficient training data. On July 12, 2023, Recursion announced a $50 million investment from GPU maker Nvidia through a private investment in public entity, PIPE, transaction. This investment further boosts the credibility of Recursion's AI-powered medicine and inspires a lot of confidence in the platform. Recursion plans to utilize Nvidia's cloud platform to train its AI models and is now considering to commercially license or to release those models using Nvidia's BioNeMo platform, which is a generative AI cloud service designed to accelerate medicine discovery. So all these present a lot of potential growth opportunities for Recursion. As far as Recursion is concerned, I would recommend to buy the shares as a medium-term trading position and to stick with it as long as the momentum doesn't fade away. I believe that the stock will have some road ahead, And I also think that the market doesn't really see it beyond the immediate hype just yet.